Hello, ladies and gentlemen. Welcome back to the XForceGlobal channel. Thank you very much for joining me here today. Hope you're all having a fantastic Friday or Thursday, wherever you are in the world. Today, we're back with another Bitcoin analysis, and I'm here to make sure to update the price section from our prior videos and see how we can go forward with the updated counts. Again, a quick disclaimer, I must cater to both the bulls and bears, so I hope my analysis shows a neutral approach to help build your own thesis on the bearish or bullish outcome. But still, I give my probabilities and personal sentiment that is deemed not financial advice. So right off the bat, again, nothing much has changed. We're still working with the idea or the narrative that our wave 4 has terminated and it has completed as double zigzag or a WXY. And we're still working in some kind of wave 4 for this primary degree, and we're working for the final fifth wave to the upside or a possible 1-2 idea. That's going to be a 1-2, 1-2, 3, 4, 5 into a 3, 4, and then 5 again, and that'll be extremely bullish. But for the time being, we want to be a little bit rational, so we want to put the idea that we're still going up, but we don't want to be being too bold and saying that we're going to be extending forever. So we'll have to kind of go back to the main targets ideas once we do reach these levels. But for the time being, Bitcoin has been miraculously holding these levels, especially after the FUD news from that Mt. Gox. So until this level is broken, especially if we're working in a 1-2 idea here after this primary wave 4 has completed, nothing really changes in structure other than the idea that we have a possible triangle also being made. So speaking of the triangle, we now have to balance the forces of the idea in terms of whether we're going to see this as a wave 3-4 already complete, and we're working in rather a 1-2 idea, meaning that this is now becoming a 1-2, 3, 4, 5, and that'll complete off the fifth wave or whatever degree that we may be working for. If we're in a 1-2, this will be the wave 3 of the primary degree, and we'll have to see from there. We just can't make too many predictions at this point. We're just going to work with the idea of Bitcoin making a range right now, and that leads me to the idea of a possible triangle also being created. So we have to make some internal sacrifices, and just based on the alternation idea on whether you want to accept this as a possible wave 4 being complete, and we're working on 1-2, and then 3, 4, 5 to the upside for the intermediate degree. But again, you'll have to accept the fact that both ideas or both wave corrections rather is going to be considered sharp, and then we're working for 1, 2, 3, 4, 5. But if we want to be a little bit more symmetrical to the wave 4, we can also be working in a possible triangle. Now the triangles are very tricky. Again, these triangles, they are prone to failure, especially for these past few months for Bitcoin. So we don't want to be focusing or kind of relying too much on the triangle idea. But again, the markets do see the triangles. Even non-Elliottician or non-wave counters see triangles as their wave possible pattern of correction, and they see that as a possible bullish continuation, right? So if that is the case, then this wave 4 is also a possibility in theory that we may be working in a series of threes, and this here is going to be the triangle, and we're looking for one more post-triangle thrust breakout. Based on this measurement, we're going to be assuming that it's going to be ending here. But again, wave 5, we don't know exactly how it's going to end in terms of targets, and we'll have to kind of assume in terms of how strong the demand is once this breakout actually happens, because we can just go up and then come back down, and that'll complete our fifth wave no matter what. So that's the idea for that. This has a more symmetrical look. If we're going to be assuming that a perfect or ideal triangle is going to be created, this would be a larger 3-4 and would have a better look, really, essentially. And that is what we're looking for in terms of symmetry as an Elliott wave analyst. But again, markets are very irrational at times, and we could just do the same thing here, and they say that 1-2, 3, 4, 5 is going to the upside, and we'll be discussing the shorter time frames in just a moment. So this idea, again, ladies and gentlemen, for the first scenario is the idea that this WXY has completed for this wave 4, and we're still working for wave 5 of a larger wave 3 that'll have a larger corrective move eventually, and that is when we can start taking the opportunities of possibly shorting the markets, depending on how far this extends. Again, it could extend for quite a bit, right? But for the time being, we are looking for some kind of impulsive, or at least one more impulse to the upside before we can re-examine the ideas on terms of where we're going to extend or how we're going to end the correction or end the impulse for this fifth wave of the primary degree. And if it's not the primary degree, again, we have the idea of that 1, 2, and it'll be based on this 1, 2, and with this nested structure of a 1, 2. Again, if we do correct deeper, even though this wave 4 may be invalid, we can also have a possible wave 1, 2 idea just as likely. But again, having the lower degree 1, 2 larger than the parent degree of a 1, 2, that makes it quite unlikely. So, but it's not uncommon. We've seen a lot of those happen in past price action, especially on the lower time frames. But this is now starting to increase in time, giving us a little bit of skepticism in terms of this being a larger 1, 2 being created. So we have to revert back to this idea being a possible 1, 2 that is now already complete, or we're going to be working in a larger time of a wave 4 primary degree that's going to be created as a triangle. So we are quite at peak validation for this idea. I mean, we're pretty close to invalidation as it is. We've hit the major Fibonacci level, so it's just more of a sit and wait game, sit on our hands and see how the markets are going to be playing out, see what kind of demand is going to be built here, especially after that Mt. Gox FUD. Really not too much of an importance to me specifically, but I think the markets will dump, not just based on that reason, but just based on, whatever reason. There's just not enough demand within these regions. We'll have to see. So that's the first idea. Now, the second idea, again, is based on the wave X idea that has completed. Whether we've already talked about the idea of how wave W is going to be terminated, either as a flat ABC, or we can have a larger ABC going into this wave W terminating here, and we can alternatively label this as an ABC. But the main idea is that the wave X has also terminated in the same zone, and we've now creating this wave Y idea, either as a zigzag or some kind of triangle being created. And again, in order to do that, we'll have to go dive into how that's going to be created on the lower time frames. So this idea still remains as a neutral possibility. It's going to go back and forth in terms of the scenario number 1 or number 2. Scenario number 1 is just more bullish. This idea is just as bullish, but we'll have a little bit of a longer corrective time because this wave Y has to play out. So this idea, again, we've been discussing this for quite some time. So that's the idea. Now, if we zoom in, I think this is where the most interesting parts are going to be created in terms of how we're going to be continuing to the upside or correcting, and I'll do my best to explain it. But for now, like I have said, we're still working in that primary 1, 2, 3, 4, and then 5, or that 4 in that triangle idea, right? But based on this idea that wave 4 has already terminated, the only way we can possibly look at it is a possible 5-wave move into wave 1, and then we have an ABC into wave A, another ABC into wave B, and then we have another extended ABC into wave 1 of the first part of the diagonal. We have a 1, 2, 3, 4, 5 that is completed as some kind of diagonal for wave C. Now, diagonals are quite common at the end of a C wave termination of an expanded flat. Those are really prevalent within the markets. We've seen them quite a bit. A lot of the times we have assumed, these diagonals, they've played out more or less quite on time and on accuracy as well. But for the time being, this is at peak validation. Now, the pros and cons to this, let's start off with the cons. Now, the con to this is that I don't like the idea of having another expanded flat. We've already tried a lot of expanded flat ideas. This larger expanded flat played out perfectly, but in terms of the shorter time frames, they're kind of deceiving. We've seen quite a bit of ideas for expanded flats prone to failure as well, just as much as we've seen larger triangles being a failure as well. Usually they'll be playing out in hindsight more than anything else. So right now, we really need to move out of here. Breaking this high will be the major confirmation. I mean, even breaking this high is not enough of a confirmation. So we're pretty much at peak validation. We really need an impulse out of here to create some kind of continuation for this 1-2 idea to really give us a confidence booster, just like we saw for Ethereum. That large wave 3 that we saw for Ethereum, that was extremely confident inducing. So that idea is a lot or far better in terms of a look for Ethereum. So if we can get that same type of impulsive structure, this wave 3 is going to be far more interesting. And we can even at that point, in terms of how far it extends, give us a more prevalent idea that maybe wave 1, 2 is even in, and that will be even a more bullish approach in terms of how we can extend the wave 3 of the primary degree, or even this 5th wave. We'll have to see how far it goes. Again, targets are going to be to be determined at that point. So the main idea for this shorter time frame, again, this is fitting into that impulsive scenario of that larger fifth wave. This primary 1, 2, 3, 4, 5 is going to be the main idea, or a 1, 2, 1, 2, 1, 2 idea that's going to be created. And then we have the idea of the triangle idea that's going to be more symmetrical. But again, the con to this idea is that wave 4, in terms of being a triangle, number one, triangles are prone to failure, or that's actually the observation that we have been witnessing for the past few weeks. Or the idea of an ABC being created has to be ideal for the remaining kind of two subwaves rather, for D and E. Right now we do have some really obscure, we do have 3 waves being created, but again, these ideas, we don't want to be even creating too many complex corrections for this wave D or wave E, and at that point it might be part of a different corrective structure, again possibly for a bearish scenario that we might be working in that larger wave Y for the shorter time frames. So what does this mean? Again, this gives us a better symmetrical look in the case that this triangle does play out. This would be a perfect, well not perfect, but a far more symmetrical look in terms of time and how we can see this wave 4 being played out. This would give us a little bit of a better look. It would follow or fit into the idea of an alternation that wave 4 is going to be sideways, because if this wave 4 is here, again, we have too sharp nature of corrections. We don't want to have that. But again, both ideas fit into the idea that wave 4 is going to be terminated very soon, and then we're moving to the upside. It's just either or, but for this idea specifically, it's more of the idea that we need to have the final legs of, or the final subwaves of D and E to play out perfectly as 3 wave moves, preferably as zigzag families. We cannot have another complex structure. Again, for a triangle, we can only have one complex structure according per to the guidelines and rules of the Elliott wave theory of triangle patterns. We can only have a WXY once within the triangle, and already we're looking like it's already starting to get pretty complex. But for now, at least we are able to fit in some kind of diagonal where ABC move to the downside for this wave C, and the wave D. E is going to finish somewhat in the similar nature of a more contracting look within this range here, respectively, confined to the ideas of this contracting nature. And we're going to be finishing off this D, E, and again 3, 3 last legs, and then we'll have a breakout, and then we'll have that final move for that 5th wave, ending that same target just like we had for that first scenario. So that's scenario number 2. Now scenario number 3, we're going to talk about more of the bearish scenarios for a temporary time being, for at least, right? Because we're still working on the idea that wave Y could still be correcting deeper. That means that this summer, in my opinion, could be quite boring and more corrective than anything else. Maybe we just need to flush out the markets one more time, come back into the demand zone, maybe retest the Fibonacci levels one more time. Maybe this was a high in itself, either as an ABC or part of a larger expanded flat of a 1, 2, 3, 4, 5 for wave C. But again, nevertheless, we're still looking for some kind of move to be at least have some kind of resolution for a wave A. And the only way I can find that as a resolution for wave A is that we're completing this idea as some kind of larger diagonal now, right? For wave A, just based on the fact with the current data. Again, this can change any moment. We don't know exactly how it's going to play out. But based on the idea that markets are still quite resilient, that's showing that distribution zones are being created with each respective wave 3s being created, or 3 wave moves. So this is another distribution zone that maybe we're working already within an A, and then B, and then C, and then another 3 wave move and 3 wave move. This is ideal that we want to be looking for. But again, too early to call for some kind of diagonal being created, because if this is an impulse to the downside, I'm not even going to assume that we're in a wave Y. So breaking this with strong confirmation, what I would like to see is a 3-wave move being created one more time, and then that'll be, okay, maybe we're not going as far as we should be for a wave C, or for a wave 3 rather, in terms of the depth that we're going to be looking for in terms of the extreme bearish scenario, which we'll be going over in just a moment as well. So that idea is in terms of our wave A being created, I only could see it as a possible leading diagonal. So this wave A is going to be completed, and then we'll have another AB created, and we'll have another corrective move up here, retesting these highs. Exhaustion will happen within these zones, and then we'll come down for wave C, finally to give us a resolution for wave Y of a wave 4 of that larger WXY scenario like I have shared here, and that'll be completing our wave Y, and we're off to the races once again. This is even more bullish on the larger time frames, so hang in there, bears and bulls, because if this idea even happens, it's even more bullish. Just temporarily we'll have a bearish move to the downside. That's about it. And again, this was the expectation, but again, we still haven't broken any major invalidations, which is why I still like to believe that this 27% move off the lows, instead of this being an ABC, I like to just see this as a 1, 2, 3 for the time being. A 27% move off the lows to me is indicating that maybe we are ready for another move to the upside. So that's just how I'm currently seeing the markets. It's just you have to make the decision as a trader. Do you see this as a corrective move to the upside, or do you see this as a larger 1, 2, 3 that's being created? And those are the hybrid ideas of the actionary waves that you have to take into consideration, both from fundamental sides, technical sides, momentum indicators, and so forth. And that leads me to the idea that we might be working in a bearish scenario. Again, this is the lowest probability for the time being, but it still leads us to that possible idea that we may be working in a 1, 2, 3, 4, 5 to the downside. So this idea is going to be a larger diagonal idea. Again, I don't know if anyone's seeing the same idea, but maybe they are. But for the time being, the only way that we can finish this as a resolution, or at least working for a wave 3 of the minor degree, we're going to be looking for a 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, and that'll bring us into a wave 1, corrective wave 2, and then 3, 4, 5, and that'll bring us into that wave 3 of the larger time frame. Now, it's going to be extremely bearish. We need to not only break this idea here, we need to break this support zone and the bottom of this to be really considered extremely bearish. But it's too early to call. But for now, we do have the first kind of leg being created for a 1, 2. Again, it's just depending on how you want to see the markets and whether you're going to accept this larger diagonal as your favorite preferred scenario, of a larger possible flat idea of the extremely larger macro time frames. So again, it's just how it is, but I'm here to share the scenarios. This is the least favorable scenario. It's not just based on bias, it's just based on probabilities as well. So yeah, hopefully that was helpful, ladies and gentlemen. If you want to make sure to go over all the timeframes, I'll have the timestamps below. Again, if you're not in my XForceGlobal Discord membership, the link is in the description below. Please do not hesitate to contact me. The membership is always open. The slots are always going to be available. And if you're not following me on social media, at X, formerly known as Twitter, at XForceGlobal, please do give me a follow. I do a lot more updates there as well. And I do my written text, and you can just kind of see more in-depth of my thinking out loud ideas as well. Thank you very much. I'll see you guys in the next video. Have a fantastic weekend. Bye-bye.